What's going on, everyone? Welcome to the channel. So today I just wanted to cover a simple price action trading strategy that I use in the markets day in, day out. And this is a strategy that I have used many times to get into trades. And you know, this strategy can be used on any pair, even in the crypto markets. This still works, and I have back tested it, live tested it, and it is a really solid strategy that you can use. So what I wanted to do today was just basically take you through it nice and steadily and try to explain to you nice and clearly how simple this pattern can be. Now, I'm not saying that you're going to be able to come into the markets and be able to just execute this kind of trading strategy straight off the bat. You know, you're going to have to go and back test it yourself, and you know, this is just my opinion and what I have learned over the years. And yeah, I thought it might be really helpful to some people out there that are sort of struggling and they want a nice easy way of entering the markets without too much mess on the screens, and just nice, clean, simple process to follow to be able to enter more trades on a day-to-day basis. So what I'm doing today is I'm covering GBP USD. Now, I've purposely used this example because it's not the cleanest structure in the world, but the thing is with trading, the reality is that you're not going to get the cleanest structures all the time. You know, you'll see in examples, you know, this perfect price action where price will move in this way and it looks perfect, but at the end of the day, that's not always the case. So what I wanted to do is show you this strategy. Now I'm going to be using the 1H time frame and the 15-minute. So what we can see here is we've had price pushing up, and we've created this level. Now if you look on the lower time frames, you will see that this will be high, low, high. But I'm just going to take this as a low, and then this is our high, higher low, higher high here. So first of all, I'll mark out this area of support, which you can see that price held for a long period of time. I'll just mark this across like this. So you see price held this area for a long period of time, and we created this top, bottom, and then top again, and we traded within this range. So what you'd be looking for in the market, which you can see here, is for the candle break to push up and close above this level, which did, and then you got that bullish continuation. But this was a news release here, and we had this massive wick, and then you can see the next candle tap back into this area, but it never broke it. So this was still a bullish uptrend, okay, because we was trading above this level. So in an uptrend, you create a higher high, then a higher low, and then a higher high, and then of course a higher low to create another higher high. Now if you fail to create a new higher high, it's a good indication that you might not be getting that continuation in trend. But as long as you are trading up and above this key level here, this higher low, you're still good for a bullish continuation. It's only when you start breaking this level of support that you then start to get basically incentive, the idea that the directional bias in the market is changing. So what we're looking for now is to see whether we hold this level or we break through. So what I'm going to do is I'm just going to get rid of this, and I'm just going to put a line across just for the candle body lows. Now I like to use the candle bodies as opposed to the wicks, because the way that I've back tested and I've learned over the years is that the candle body close, I should say, is a lot more powerful, because this is the close and the opens of the candles, whereas the wicks is just where it's pushed down and price is pushed back up. So let's just play let's just see how we move. Okay, so we're pushing back into this area of support. Let's keep going, and boom. Okay, so what we can see now is this 1H candle has pushed down quite aggressively. So now the market has been in this uptrend like so. We've been pushing up, okay, and now what you can see has happened, that we've started to break out of this. We've come back to this key level of support. So just remember, anything above this level is still a higher low, and still good for the bullish continuation. But what we can see now is that we've had strong volume breaking, pushing down and below this level. It's a good indication that you're getting a reversal in trend. And if you just look at that, it's sort of quite obvious that we're not going up anymore. You know, the bears are not in the market, the volume died out within these candles, and now look, the bears have stepped in quite aggressively. So what you want to be doing is scaling down, and what we're going to be looking for today is for a double top to get the bearish continuation. So we're scaling down onto our lower time frame. Okay, so we can see here, this is where we was at with the candle close, and now we're just going to let price run, and let's see. So this, we're going to mark this level out here. This is a key level within the market. You can see we've pushed down and pulled back. So now this is your lower low and lower high, and now we're looking to make a lower low. So what we're looking for now is for price to pull back into this zone. So first of all, we'll just let price move. Now you can see there we've tapped into it. Okay, so you're getting a good indication that the bulls have been pushing up. We've tapped into this zone, and now we just want to see depletion in the candles. Wicks are a good suggestion, and what we're looking for is wicks and bearish engulfing candles to show that the sellers are stepping back into the market. Okay, so you see there, you know, it's not a clear bearish engulfing candle. We've got a wick to the bottom, a wick to the top. Now again, we're just waiting patiently. Next candle. Okay, so we've got the wicks. The volume's not really there, so we're going to keep waiting patiently. Now in trading, patience is key. It really is key to be able to find these trades. Now you can jump into the market a bit early, you'll get stopped out, and then the price will then move in your direction. It's really annoying, and it's happened to me a lot of the time. And you know, at the end of the day, it all comes down to patience and just waiting that little bit longer so you can get into the trades. So what I'm going to do now, this, you can see here, we've had the double top. So we created the lower high, lower low, lower high. So still, anything below this level is in a downtrend. And we see we've tapped into it, we've had the wicks, and now what we can see is the bearish engulfing candle, engulfing these candles to the left with our double top. Good indication that we're going to get the bearish continuation. So what we're going to do, now it completely depends how you want to enter this trade. You can enter it with a market execution, or you can enter it with a sell stop. That's completely down to you. But for this example, we'll be just going in market execution. So you see this candle, and then you'll be going in instant execution straight into the market with a sell. So what we're going to do is go for a 1-to-3 risk reward ratio. That's the risk reward ratio that I tend to prefer. So let's see here. Now I'm just going to pull this down a little bit. We don't need that stop all the way up there. Okay, I'm going to go for 26 pip stop loss, which you can see there. And we're going to go for a 1-to-3. So there we go. That'll be our 1-to-3. So now what we're going to do, if we was in the live market, we'll be in, and we're just going to let this trade run. There we go. And now, of course, this is just an example, but this happens in the markets day in, day out. And if you go back and you look in time, you will see this. Now, it is a really great example. And, you know, of course, the higher time frame analysis, the structure didn't look too clean, but you've got to remember, this is the way that the market will move. You know, you'll get news, price will push down, push up, you'll get wicks. You know, things can look a little bit choppy. But when you start really getting into it, you start getting a good idea of how the markets move. And, you know, if you can just look at things in a nice, clean, simplistic way, you start to understand. And, you know, it's basically, the way I see it, it's like reading a book in a way. You just learn the language of the markets. Now, it's a really good example. You know, we had this bearish candle pushing down, breaking our key area of support, okay? And then what you can see happening is we're pushing down into this level, you know, price hasn't pushed back up, and then boom, sellers have pushed through, breaking our key area, you know, we're broken out of trend, and then what you're looking for is to get them sell continuations. Now, if your trading strategy is to just look for double tops and then jumping in the market on that, whether you're just looking for a simple break retest, that is entirely up to you. Now this example is just for a break, and then you're looking for the exhaustion phase with a double top. You're looking for the wicks, you're looking for the bearish momentum kicking back in, show that the sellers are stepping back into the market, and then you're entering the market looking for the continuation down. Now I really hope you enjoyed that example. You know, I'm going to be putting a lot more videos out there like this, and I'm going to be trying my best to bring as much education to you all as possible, because I feel like it is really important that you get to learn these concepts and be able to back test them and live test them in the real markets. So yeah, if anyone else has any ideas, any concepts they want me to cover, let me know. I'll be more than happy to give them a go if it's something that I'm very knowledgeable about. If not, I'm just going to keep putting videos out there on strategies that I have learned and back tested and live tested day to day over the last however many years, 4 or 5 years. So thanks for watching, everyone. I really appreciate everyone tuning in. Give me some feedback in the comment section. More videos to come. So take care, everyone. Again, thanks for watching, and I will see you all soon.